Welcome, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take those opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, October 27th, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we're going to talk to you about what we're trading this week. In last week's episode, I took some screens on some potential earnings plays that were going to go down this week. I waited a little bit. I decided to enter a couple of them. So in this week's episode, we're going to recap how those are going for me. Some of them have happened. Some of them have yet to happen. And we'll just kind of look at the setup and take a peek at those. We'll also stop in with Viper and see what he's been trading. He wasn't clued in to all the earnings action this week. I think he skipped the episode myself. But we'll see what's happening in his camp. Before we get to all that fun, I want to give a shout out to our Discord channel. Link in the description below. This episode is being streamed live to our Discord as we do every Wednesday night. The bots are listening. Additional link down there.
Get your requests in now.
That's right. The bots really love crypto. So if you pay attention to the view counts, anytime we talk about crypto, we return not orders of magnitude, but multiples higher view counts. And we always get some great comments from the bots. So we might touch on some crypto just to get some comments from those bots.
You're selling us short. We're just that forward thinking on our crypto strategies.
That could be. I should give us more credit than I do. I mean, I just view this as two schmucks babbling about stock trading, but maybe there's more to it. Yeah, so one more link in that description. If you want to keep track of the trades that I make, I do post them all publicly on thetagang.com/sprocket888. But let's get to this week's content, and we're going to take a look at some of the trades that I put on. And so I basically put 3 ticker trades on so far. And the first one we're going to take a look at is Twitter. Now, this is an earnings play that I saw from an elevated volatility of Twitter. The chart kind of looked, not bad. You can go back to last week's episode to see what I was thinking on entry. What I've done is I've colored the boxes. I ended up selling the 61 put. And this is when I sold it. I actually sold it a little bit ahead of earnings. Normally, I would kind of wait until we get to the day of earnings to put the trade on. But I was kind of liking where this position was. I wanted to kind of grab the premium a little bit early. Maybe I was just impatient. But you can see the action here. So green is full profit, yellow is partial profit, and red is loss. And the bottom of the red line is bailout. And spoiler alert, it's on the screen. It's not going so well. However, if you recall, one of the things I liked about this trade was the first monthly level was here in the partial profit zone, but there actually was a second monthly level to add support before we hit my bailout price. And we'll see how tomorrow goes, but that's pretty much where we crashed down after earnings, right through that first monthly level. And we're kind of stalling out, just dipping ever so slightly below that second monthly level that I've had. So we'll see what happens. I'm really going to debate on whether or not to take the bailout, or, whenever I play naked put plays, I usually keep one of the possibilities to be long those shares. So depending on what type of price action happens here, I might not take the bailout price right away. I might go long the shares at expiration. These are November expiration cycles. So, there's still like 2-3 weeks here to get panned out. So they actually reported really well at earnings. At least not super well, but after hours they were up. I thought I was going to be looking at a great winner, and then this morning just a lot of sell-offs. There were some downgrades. So yeah, we'll see how that one plays out. The next play that I took, and I got to work on my ability to read a calendar, because I sort of messed this one up, is Apple. So I do own shares of Apple, and I have been selling calls against my shares of Apple. Uh, Apple's earnings are tomorrow, Thursday after the bell. For whatever reason, I thought they were today after the bell. So I put this trade on today. Um, and the reason I put this on was not really because it was a good earnings play. I did not talk about this last week. This was missing one very key part in the earnings that I like to play, and that is uh, inflated volatility. So this did have volatility, this did have premium, but it was not historically high. Okay, so as I mentioned in last week's episode, I really like to play that volatility crush. So I look for earnings that have extra volatility in them, or those positions that have, above average volatility for that ticker. This is not Apple. This does not check that box. However, I am pretty bullish on Apple overall. It does pay a decent dividend. It does have a very good historical track record. So I actually put this trade on not just to play earnings, but rather to potentially go long some more shares. So what I did was I sold a 150 put, which was essentially at the money today, for about $5.50. So if I got assigned, it's basically taken about a $5.50 haircut off the price. If it rallies from earnings because it goes great, okay, well, I'll take that $5.50 as a nice consolation prize. So we didn't talk about this one last week, but I did stick this trade on today, and Apple earnings are tomorrow. So we'll kind of see what happens there with Apple. Now, the next trade that I put on, we did talk about last week, and it was Lending Club. And if you'll recall, Lending Club was a little bit different of a play because I was going to play it with a covered call, which is a little bit atypical of the type of plays that I usually get in. I'm usually straight premium selling, looking for that volatility crush. This one had quite a bit actually, of call option skew. And I wanted to take advantage of that. And so I wanted to go long the shares and then sell a call against them. And so in last week's episode, we were kind of coming up. We had just broken through this monthly level, which is charted right here. And the idea was, okay, we had just break through. We had kind of started to test it a little bit, and it was kind of going back up. So I was going to go long the shares at this price, wait for more of a rally, and then sell a call the day of earnings or the day before earnings to really hopefully get the elevated premium and get some real distance on my strike. Well, it never really went up. So the shares actually kind of slid. They actually fell through that monthly level prior to earnings. So I was long 200 of these shares, and I never sold the covered call against it. And I was looking at the charts today going, do I take this and sell the covered call now, even though I'm quite a bit in the hole? So my covered call, the best I could do would really be at my cost basis, which wasn't a super ton of premium. The longer term picture of this underlying from last week's episode was it was really bottomed and was kind of on a bullish tilt upwards. And earnings are really a crapshoot anyway. It's a coin flip. I say this all the time. Earnings are very binary. Earnings could be amazing and the stock could tank. Earnings could be terrible and the stock could rally. It's just crazy how 50-50 earnings can be. So I just held them. I didn't sell them. I didn't sell a call, just straight naked the 200 shares of Lending Club. And then they reported earnings, and the earnings far exceeded estimations. And I'm going to flip on after hours. And like I said, Twitter was up after hours too. So who knows how this thing's going to open tomorrow morning. But this thing jumped almost $10 after hours. So, I think right now it closed at like $40. This one's saying $39.61 in the after hours. So this is good if this can keep up when the stock opens. The last quarter they beat, the stock gapped up like 40% the following day. So, we'll see what happens tomorrow. If this thing really starts to rally, the volatility should go through the roof. Actually, there should be a ton of volatility expansion because this is really stretching the range the stock has been in. And what I will likely do is sell a call. just to collect more premium. If this thing continues to rally past that call strike price, okay, I get assigned. Maybe I left some money on the table. I'll be happy with the extra premium. I'll be happy with the gain from where we are. If it doesn't quite make the strike, hopefully I get some good premium out of that. I can rinse and repeat, and we'll just kind of see how that thing goes with lending clubs. So really, I'm attributing this to kind of pure luck, that this thing seems so far to have really worked out, but we'll see. Viper, what you got any feedback from these plays, or what you got cooking this week?
Yeah, so I kind of want to walk through those three tickers a little bit. Basically, this is what I love. It's becoming one of my favorite things to chart your plays without knowing your play.
Oh man, this always makes me nervous.
And I should say that hindsight is always easy. And what I learned most from these exercises is just, I don't know, the potential for just all kinds of, as much determinism as you could ask for out of certain things. Obviously, nothing is deterministic in the stock market. But anyways, let me switch over here. Let's start with Twitter. So I want to go over a couple of things. So I've been just constantly evolving and changing my charting strategy. So kind of every way I look at the charts today has echoes of what we've talked about in the past with charting. But I've also, this is kind of some new strategies that I'm deploying here, because, we've talked about before, chart the yearly, the monthly, the weekly. And that's a really good exercise just to get your mind, get your eyes to see what's important. What I'm trying to do here is because when you do that, you can get a lot of noise on your chart, and you get a lot of lines and don't know what's what or what to pay attention to. So what I'm trying to do and how I charted here is cut through that and let's look at what's important. So the way, this new methodology that I'm using here, let's look at Twitter. So the first thing I do is I go far out in time. So I mean, this is the monthly that we're looking at here. And what I'm looking for here is I just want to define the bottom of the swing, the bottom that we absolute, bottom support that we have. Go ahead and mark that green. So that's there. And then I also want to just throw down, where's the all-time high? Just some things to put into context. And then if we keep digging down a little deeper, I won't change it to the weekly, but this yellow line pulled from the weekly, because the monthlies, if some charts will give you the granularity you need to draw the line, to draw your levels, sometimes you got to go a little bit deeper. So I drilled into the weekly. I charted this. I specifically honed in on this level. We see a couple of things that are important here. One is we have a resistance, and then it flipped, and it flips a little more clearly on the weekly, but we had the resistance and it flipped to support. And that's one thing you really want to start to hone in on, is when you have a resistance, flipped support, and tested. So we had it flipped support, and then we got it tested right here. It is maintaining support. So right now, this yellow line is the level we need to hold in order to stay at least bullish on this level. That, if we lose this, then we're invalidated and we're going to be in a downtrend. You can do this on multiple timelines. Here, this was, as I drilled down the different timelines, nothing else, really stood out as all that important. And so now just lastly, going down to the daily, and just kind of seeing what's happening here. So yellow line is what we absolutely need to hold. Earnings were on this blue line here. And the last thing I want to call out is this red line that just showed up here. This was we briefly had, on this swing up, we briefly held on the daily. We briefly had this level. at support, and then we lost it. So we lost it here, and now we've just never regained it. So that's kind of a critical, should be seen as resistance. Any run up to it should be expected to resist until we break it and get a positive confirmation test on it. What else? And so now on the dailies, what I kind of drew based on the support bounces that we were getting here going into earnings. I mean, this was basically that 60 level. That's kind of what we would want to hold now that we're zooming into a lower time frame. We would want to hold this 60 level in order to, again, keep our probabilities of an uptrend alive. And obviously what we see is we lost that. We lost it on this time frame. Yellow level is still holding, but we are headed that direction, and it is likely to get tested there at the 48. The last chance we have is over here. This is kind of noisy, but levels are levels, so maybe there's something there. So we'll call that kind of where I believe the price is currently, 54. We'll call that kind of the last chance before we are testing this yellow level again. So none of that is great news for your play.
Where were you last week
least,
to tell me not to do it?
Well, I mean, it probably was still a decent play. Just 61 put sell was really aggressive. I don't know what the option chain looks like, but something around this, and this is more just thinking out loud for what goes through our mind when we're combining levels and naked put selling. Yellow line is where I would want to be looking to sell one of those puts, because we do have those tests. Though with this coming down towards it, it could break it, but we're definitely seem to be headed towards a test of that 48 level. It could test it, it could bounce and maintain, and then you might be all right.
Yeah, so I need to defend my strike here a little bit. And this plays into, hey, be patient. I put this trade on before Snap reported its earnings. So when I put this trade on, that was like a 29 delta. So this Twitter was actually trading around 66.50 or something like that. And then I put that trade on the day that Snap reported. Snap reported, and everybody lost their mind in social from iOS stuff. So by the time they reported earnings, yeah, it was like a 50 delta put.
Yeah. And the other important thing to call out is this is part of the mindset that you have to break when you're going from share trading into premium selling. Is nothing is it, it's not a fast moving play. And so honestly, as long as a test of the 48 holds again, although multiple tests of that level isn't a great sign, like you want to see moving up, but nonetheless, if a test of the 48 holds, that's not a bad options play, because you just need to now get some sideways action. Your break even, I don't know exactly where it was, but there's potential for at least coming back up, where if you wanted to, you could start to evaluate rolls or closing out at or whatever. Apple's nothing super exciting. I was just going to walk through that real quick. So same idea, looking at the weekly, but intentionally zoomed way out. We have this green line down here, which is kind of our big old bottom support. We have the yellow up here, which came from the dailies, but you can see it. You can see it here on the weeklies. This is the signature, resistance flip to support, resistance. We get. It's not like, we broke through, but there's a test here on the daily, I believe. That's where you would zoom into the daily, and you'll see a test of this level. we launch up off of it, we come back down. Now we've got confirmation, we launch back up. So 137 is the big hold line for Apple. And on the weeklies, we're kind of bouncing pretty good here. When we go down to the dailies, there's a little more granularity here, and what we can see when we go down here is we can see this orange line. This is the level we've lost. So it was resistance, resistance, resistance. We broke through it. I mean, I don't really know. Maybe calling it lost isn't quite accurate, because we never successfully tested it. We broke through it, we came down, and we lost it. We failed it, and we came down. Now we're coming back up, pushing against it. And so far, as you can see, there is not a lot of hope that this is when we break through it. So 149 is kind of appears to be a current resistance ceiling for Apple. I don't remember, what was your play on this one?
It's a 150 put.
150 put. Okay.
So honestly, it was an at the money put, so it's a 50 delta, and that's
okay.
if it goes forward, great, wonderful. If it doesn't, I'm okay picking up the shares actually in this play.
Oh, that's right. Earnings hasn't happened yet, so this is
tomorrow.
This is calm. Yeah, this is expected calm before the storm, and this is, potentially a good place to be going into earnings. Is up against this level. Earnings are the kind of catalyst that could push you through a resistance ceiling like this, which has been done before, and then we're kind of, once we push through that, we're on track to test all-time high. And speaking of that, I do have a play that I'm going to talk about in a minute, where when you get this breakout and you want to play up to all-time high, I had a successful trade doing that. So just notch that in the back of your head. Lending Club, I thought was fun to see, because this is where a lot of that confirmation of charting and your strategy and thinking and just all the things coming together. Once again, let's zoom out. We got our bottom support. We have our all-time high here. I love, comparing Lending Club between Apple and Lending Club. I'm finding that I greatly enjoy a chart that is not the Apple chart, specifically because this, like, charting this, what are you going to do? Like, it's just
it goes one way. I don't know what to do with those either. I look at them, I'm like, this thing only seems to really kind of go up. Where's the ranges?
Yeah, buy it, stonks go up. But I mean, I think everything I did on Apple here, I believe, is the best you could do, because there are some indicators in some of these areas. However, it's not my comfort zone when something is just buy this and hold it, and you're golden. Worst case, just hold it and weather the bounce. What I like about Lending Club is this. I feel much more confident, because what I'm going to break down here in a second is this. We have all of these levels that identified as it was crashing down. And so now, once you start a swing, like, now we're just looking to all these levels that we previously identified. And, that's going to be our, it's just a much cleaner charted course when you've come down and crashed to the bottom, and now you're climbing back up. So on that note, if we start to look at what was charted here, so this one from the weekly, again, somewhat of the signature that I indicated. It wasn't really resistance until this area in here, but I didn't want to chart it there. I wanted to take it all the way back to the origin moment of when that level appeared, and it appeared as support. So we kind of were support. I had a couple tests and confirmations of support, and then we lost it. We broke down, then we came back up. And In here we broke through. We kind of lost it again. This is the weekly. So again, imagine the daily, you'd have a lot more data points and you would see these tests and fails more clearly. But then we break through and then we get support and now we're moving. So yellow 1577 ish is the line we need to hold because we've gained it. And so now we need to keep it. And the goal obviously is then to move on, gain another level. So the next level is this 3252. Zooming back out, the reason that this is now important is because, again, we had this support bounce here. We lost it. Now we have a lot of clear resistance that appeared here, and then we just completely lost it and we slid way down. So 3252 ish is now where we need the flip because, like I said, we had this yellow. If things are going to stay bull, we need to gain the next level. And it looks like 3252 is the one that we need to gain. And earnings could be the kind of thing that does that. And so now things start to get interesting. So what was interesting is I did not look at after hours. And so let's see, you said after hours pumped it up to 40, 41.
41 was the high after hours. I think it settled just slightly below that to about $40.50.
Yeah. So let's go to the daily chart because we can kind of see that we broke through this 32 and we were kind of testing it here. So critical moment as to what happens next. What I thought was interesting about the after hours kind of peaking up to 41, 42 is just because after hours are low volume, its price levels are still going to exist. Everything still exists there. And where I had to laugh is when I charted this earlier today, I was like, okay, so let's assume that we gain 3252 here. So now we got to start looking at what's our next target. And when I started looking, the next bit of churn here comes up in this. So now we're going back in time. And I kind of looked back here and I was like, what do I see here to set, some sort of price target? And I was like, well, we have this swing here. We did swing up and up. So, I mean, we do have this 48, kind of as a stretch, but there's some clear resistance levels here, like this guy, which reappears as resistance towards the end of this downturn. So the very first level that I drew as a potential profit target. So once we got confirmation of the 3252, if you bought in, if I bought in on confirmation of 32, 42 is going to be my first profit target where I take profits off the table because I believe there's going to be a test reaction at that level. Obviously, this is where I chuckled because after hours spiked right there. Because again, I mean, none of your levels are ever going to be dead on. You have a shmoo factor. And that was pretty good to see that after hours ran up to 41, kind of came back a little bit. So that's kind of even some after hours confirmation of that level. And that's why I love watching after hours, especially busy after hours like an earnings, because you can see so much that's just going to get swept away by not examining after hours or extended hours in your charts, because you would miss that if you were looking at the daily or something and you weren't looking at extended hours. You'd completely miss the fact that we ran up and tested this 4267, and whatever happens on open is actually in reaction to the test of 42, or but you're not going to know that if you weren't watching after hours. So my crystal ball says that if opening price is around 39 to 40, it's going to be there's going to be one of those weird red candles where it's a red candle but it's entirely above the previous day close. And we're probably going to see something like that in reaction once the rest of the market starts pouring in, because it would take a lot uh, and a significant amount to overcome this level and move up my next profit target on the daily. Like I said, I actually skipped. I skipped over this 48. I think 48 would be a good good stopper as well, because there is some clear resistance there. There's some history, but my daily I put up there at 58. So that was what I saw, and I thought that was interesting. And uh, your shares with that spike after hours, I would say the profits on that after hours is probably the profits you've seen on those after hours shares is probably at risk of not being there on open, because that's one of the things that I've been doing a lot of scalping of. We can talk about it on a future episode once I've vetted it a little bit more, but scalping earnings on open, post earnings on open. I'm definitely going to be watching Lending Club tomorrow morning to see what kind of opportunities appear, because it seems like a massive beat like that, there's going to be crazy action for the first 15 minutes of the day, up or down, and there's opportunity to come in and scalp away at that. But in that case, when after hours spikes that hard, I usually try to watch and potentially sell some of those shares in after hours, because sometimes it's hard to keep that momentum of a massive spike after hours when the market opens. But anything's possible.
No, no, no. The one thing I'd point out, why don't you zoom in there to the most recent gap up? I just want to call out that that gap up happened right after they beat earnings last time. So just saying.
Ooh, nice. Did I level that? No, I didn't mark that. But I mean, that's true. I mean, that's another big part of it too, is volume. I mean, look at this volume down here on that gap up. If the volume follows, because we obviously didn't see the volume today leading into earnings, which is expected. If the volume's there, the price will go. I mean, volume is your momentum pusher. So yeah, it's not impossible to see an open at 30. I mean, that would look like a pretty similar gap. Open just below the level and then have the volume just shove you through. So I'll be watching. Our viewers won't because of the delay. You
Yep.
should have been
Yep.
watching on Discord.
Yep. This will just look really weird when we finally release it.
Yeah. And all of my convictions, it'll be like crash to the ground, everything on fire. And I'll be like, what were you thinking?
Yep.
Okay. So playing an all-time high. I just did that over here on Solana. So this is a crypto, but the strategy I used here has nothing to do with crypto and has everything to do with an underlying that's pushing towards an all-time high. And you want to just kind of grab that little gap to the test of the all-time high. So zoomed out, this is the chart we're looking at for Solana. And what we see is this white level up here around 212. I'm hiding the rest of the chart because I just want to walk through my thought process as I saw it unfolding. So 212, we ran up, we hit it, we dropped back, and we kind of catch a slight support resistance flip here around 124, 120, 124. Now, to be honest, one of the things that put this on my radar was there was coming up probably around October 10th, 11th, after we kind of had another little swing. There were some articles that started coming out, some talking heads that thought Solana was going to make another run at all-time high. So there was a little bit of that FOMO emotions in the back of my head, which is really hard to ignore. But I came to the chart and said, let's work through this to see if there is any potential credibility to that thought. And in the world of crypto, though, who knows? But nonetheless, I did like what I saw on the chart, because we had this swing up high. We came back down around 120. And then we swung up again. And now when we dropped back down, now we have a higher low where we were around 140. And then, we kind of kept consolidating here. And that was the other thing is, we're getting these higher lows and we're also swinging less and less. So we're kind of have this pennant pattern forming. Consolidation is happening. And as much as I like a pennant pattern and I like to emotionally paint that as it's about to burst and jump up, it has absolutely burst and dropped on me before. So there isn't always the guarantee that that's what's going to happen out of a pennant. But nonetheless, I was like, well, I honestly didn't throw much money at this at all. I just wanted to test this strategy of like, all right, we got pennant forming here. And one of the things I really wanted to test here was alerts, because that's one area that I'm really not that great at. Is I try to just look at something and be like, now's the perfect time to jump in, which is a terrible strategy. Be robotic, set an alert, set your chart here where you think it needs to go to trigger the bullish trend that you're going to go up to all-time high. Set an alert, walk away, stop looking at it, and wait for you to get that alert. That's exactly what I did here. Basically, what's happening is instead of emotionally buying here around 156, where the pennant's squeezing, because I've done that before, I'm like, it's squeezing, it's going to go. And I buy in, and that's just gambling. There's nothing about that that's locked into any logic. What is into the logic here is this previous high swing up where we had resistance right around 175. We know we need to break that. We know there's potentially resistance there. So set an alert above that. And in my case, I actually went for 195, this green circle. So this when I go to the daily, or when I actually zoomed into the 5-minute chart, I actually went way in deep. And what happened back here, basically this level around 190 appeared, which which I've marked with this red line. But I said, all right, we absolutely have to break this 191. Nothing on the upside can happen until we break that. So I went ahead and I was like, I don't want to mess around with like a 192, 193, a little test fail. So I set my alert right here at 195 where the circle is. That I could probably figure out a better way to estimate that. It was mostly just like, oh, that's far enough, 195. So I set that alert. I got the alert. Hey, Solana broke 195. I jumped in. I mean, I could have set an order, but this is crypto, and I don't know. I haven't had good luck with limit orders in crypto when things start going nuts. So that is the one difference. A stock, I just would have just set a limit order to buy. Got the alert, jumped in. I bought here at this blue line, and now it was just wait. And we're on the 5-minute chart. So, I mean, you can see here within actually, I guess it was longer than a few hours. But I jumped in here. We ran up. We kind of found this new resistance level, but I'm feeling bullish because we broke this. So it might take a little while, but the chart is has been confirmed that we are now breaking up. And there were a few resistance levels, but there were very few resistance levels that concerned me on testing all-time high. So my whole play here was kiss all-time high, sell it all. I'm out. I walk away. That was the entire play. And then sure enough, we can see we go sideways a little bit. So this blue line is where I bought. We never threaten or push down on that. So we're just kind of continuing our sideways motion. It's getting its stuff together. And then finally we burst, we run up here and we catch exactly what I was waiting for, exactly what I was looking for. We test all-time high and we fail. So that was why I just want to see it touch. I believe I even put a sell somewhere around 210 because once again, I was like 212 might not be the dead on exact. Back it off a little bit. So 210. So, it was a quick grabbed, is that 6-7% over the span of, I guess it was about 7 or 8 hours. And then I walked away and I said that was the play. You can see, I mean, just to continue to look at the chart, you can see after we got that test, I mean, I don't want to be a part of this. This is not good use of my capital. Once we hit the test and then we push way back down, we drop and there's all this. Sure, we came back up and we tried to set a new, well, we did set a new all-time high. It didn't hold. Once again, the previous all-time high didn't hold. But that's the efficiency of trying to set up a play that makes sense, is you can skip all of this mess here when you get that failed rejection, because now nothing's clear about when we're going to go test it again. So that was the play I had on Solana. That, like I said, it's a crypto play, but I don't think it's crypto specific. I think this part of the strategy works when you're dealing with an underlying that has few resistance left between the last major resistance and an all-time high. And that's a little opportunity to just grab a little piece of the run up, get out and close it up. And going forward, I'm actually going to try a new challenge for myself. And that is, first of all, put the crypto aside for a second and just get back to some solid stock plays, some solid swing trading. So an experiment, a challenge, a thing that I'm going to go undergo here that we'll check back in periodically as things start closing, is I need to be more robotic and more methodic in my trading. Right now I'm doing a lot of very hyper focus of like, okay, now look at this, now look at this, and then I set the play up and I watch and I wait. To me, the next level of my trading strategy is to set up some more, not quite automated, but also kind of automated plays where I take a corner of my account and I set up OCO orders. I do like, it kind of pulls everything together. So it's going to pull together screening that we've talked about. It's going to pull together price action. It's going to pull together position sizing. And my end game is to take, I don't know, initially, maybe just 10 or 15% of my account. And over in this corner, I'm just going to go screen, 1% plays, come up with 10 or 15 plays based on screening and everything like that. When I think there's an opportunity, I'm going to drop in an OCO order, which is order cancels other, where I have a profit target, I have a stop loss, everything's accounted for, all risk is known. And I set these 10 or 15 plays up if I can find them. I mean, I'm not gonna push to make a play happen if it doesn't look like it's there. So maybe if I end up with 5 or 6, whatever. But I'm going to set these up, drop them in, keep a diary of what I was thinking, how it's set up or whatnot, and then just walk away. And, then with the rest of the account, continue to do whatever I want. And then we'll come back and look at what's my win percentage, and that's kind of a good litmus test of, am I on the right track with screening and level identification and play setup and all that kind of stuff. So I'm kind of excited about it. I think it's a nice little, like I said, mitigated risk. Everything you do needs to be mitigated risk. And so I don't expect to lose 10 or 15% of my account, but I've had worse days. So I think it'll be an interesting exercise.
Yeah, I'd say the key there is going to be keeping that journal. What you're kind of proposing is really some of what I started with when I first got into premium selling and option trading. Was I said there's got to be a mechanical way to really do this premium selling gig. And I did lots of research. I laid out a bunch of plays, and then when I finally got ready to test it and to do it, it was all about small sizes. It was about lots of plays, and it was the journaling is so important to write it down, because yeah, without that you'll never remember what you were thinking, and you'll only remember what you thought you were thinking, which probably was not what you were thinking. So that brings us to the end of this week's episode. Got a couple of plays still cooking, a couple of upcoming episodes I can see in the making now as we see Viper try to tackle his 15% challenge that he wants to go out and become a little bit more mechanical, which should be a fun journey to watch as that happens. We'll keep you posted. We'll put it in the episodes as we go. Still a couple of earnings plays left out to see how those work. It's to be an exciting week next week, and we'll see what that future brings us. So good luck out there, have fun, and remember, think outside the block.